Hi, this is Sankur Sharma. In this video, I want to talk to you about Lyft. Lyft losses have reduced drastically. It made good revenue and good profits, earnings per share. So let's talk about Lyft and see if it's a good place to buy or sell or hold, because if you remember, Lyft came to market at a lot higher price than it is currently at. So is there an opportunity to buy Lyft here? Let's discuss. Hi, welcome back. We're going to analyze the Lyft stock now at a greater detail. And we're going to look into all the numbers, and we're going to look at the chart and see if we can come to a fairly good conclusion about it, whether to hold, whether to buy, whether to sell, what to do with it. So let's get started. First of all, Lyft has announced results Wednesday after market close. Now, here are the key aspects you need to know. Lyft reported quarterly losses of 3 cents per share, but the analysts were expecting 4 cents losses. So the loss that Lyft gave is less than what market was expecting. Its quarterly revenue came at 1.52 billion, again, which beat comfortably analyst expectation of 1.44 billion. Its sales has increased to 1.15 billion from the same period last year. It had gross bookings that were up whopping 16% year over year. That amounted to 4.1 billion gross bookings. Its free cash flow is about 242.8 million for the quarter. But what is interesting are the two things. One, active riders number is up 9% year over year, reaching 24.4 million, and recorded rides were up 16% year over year, showing a number of 217 million. Now, those numbers are fabulous. So if Lyft can maintain these kind of figures and this kind of growth, very soon it'll return to profitability, and also it will not make those losses because the EPS, quarter over quarter EPS is increasing, but yearly profits will also jump. So it is at a point where the growth is really critical for Lyft. If Lyft can maintain good movement in the next 3 months, we should see the stock price doing higher moves. Now let's go and decipher these numbers in greater detail. If you look at the earnings per share, 0.19 is what is expected by the street. We got 0.29, which is excellent. You can see compared to last quarter, we had a better quarter this time. Right? Now, if you come down to revenues are at a better place compared to last quarter, which is plus 5.46. So you can see those numbers here. So those numbers look good. Now let's go and jump and see statements. If you look at the cash flow for the current quarter, cash from finance activities is positive, and free cash flow may take a little bit of time for it to show here. So currently free cash flow for annual side is not showing. So we are in quarter 2. So let's jump in and see the income statement. If you look at the income statement, the gross profit is steadily increasing. I would like to look at the operating income. That is better compared to last quarter. I'd like to see pre-tax revenues a little bit not showing there. Okay, let's jump in and examine the income statement. So if you look at the income statement, equity is not shown, there's no equity. Pre-tax income is 6.87 million. So it turned from negative to positive. That is good news. If you look at the other numbers, net income is also positive, which is good. Now let's go down and look at, they don't pay dividend. This particular stock doesn't pay dividend. EBITDA is year on year, EBIT is positive. Operating expenses slightly higher. Now let's look at balance sheet. So balance sheet, we are looking at the total equity. Total equity is positive and is higher than last quarter. That to me looks like company's got enough funds to sustain, and the total equity is less than the debt that is due, but net debt is reducing. So which the net debt is reducing, which is good. The book value per share is 1.41. That's the key aspect. So overall, if you decipher, it is looking good. If they can sustain this pace, stock price could go higher. That is what it's saying in plain English. Cash flow wise, I wasn't expecting anything to see here, so that is okay. Now, if you go and check revenue, contracts with customers is their biggest money maker. Rental is slightly less. Rental is slightly less. So they're operating only in United States. So that is in nutshell the summary. Now let's go and check the stock chart. If you look at the stock chart, this is a weekly stock chart of Lyft. Now what I want to draw your attention to is after the earnings, the stock jumped to around here 1843. You need to take this stock into context. So I'm going to zoom out a bit to show you where it came from. So this stock came from higher levels. It came to market at around 88. So on the day it came as IPO, it went up to 88. And then it collapsed for a period, right? So last 4 years didn't do anything. Then it is now going sideways. Now this piece is very important because most of these stocks after they collapse, they consolidate, they move sideways for long periods. It's like a winding up before they take off. So this particular stock at the moment has been on the sideways for very many months. Now, if the stock goes up, currently the stock is at 1837 after the earnings. It's got a lot of strong resistances around 20 to 22 area, worth noting. But once it crosses that, it can go to these levels, 24, 28, and then there's a strong resistance of 32. Once it crosses, it can go to 41.65. So they are doing a lot of deals at the moment. So it looks like they're not too far for eliminating those loss figures. So with a bit of continual effort from their side, they might see a full year profitability at some point in the next 2-3 quarters if they can maintain current aspirations and goals. So overall, if you look at all the figures, the stock is still cheap compared to how it came to market. If you want to be aggressive, you can take your position on a pullback around 15 area and then hold it until it gets to 32. Currently it's cheap because as I showed you, it came from 88 price. But if you want to go back, if you want this stock to go back higher, you're probably looking at holding this for at least 2-3 years because the weekly chart. So I expect it to be taking a lot longer. At least you got to give yourself a year or two before you can see this going back up. But if you want to do this as a short-term trade, you got a short-term trade up to $22 and then 24 if it crosses that 28. But 32 might be a serious resistance because that's where it fell off in the past. So I would say if you're looking for a short-term gain between the 2 quarters, you have a trade. Otherwise, I'm not overly excited, but it looks cheap considering where it came from. So I'll leave that to you to decide. If your monies can be put to work elsewhere, that is also fine. But if you like the stock where it is currently compared to its previous price, and you don't mind holding the stock without dividend, you don't mind holding it until it turns to profit, then you can do so. That is up to you. From my point of view, it's not a buy, sell, or hold at the moment. If you're already in the stock, it may be worth considering taking profits anywhere at between 22 and 32 ideally. If you're not in the stock, you could get in at 15 and sell it at 22, at $22, and it hits $22. That is if you're short and medium term investor. But if you're not in and it doesn't come down to 15, there's no point in chasing because the upside reward is only from 18 to $4. The downside risk is a lot higher. So reward to risk is not looking great. So probably if you're a trader, it's a good idea. If you're a long-term investor, not something that I would be really excited because lack of dividends and the company still had a lot of work to do. Hopefully that is useful. This is Sankar Sharma signing off. Don't forget to subscribe to this channel. I'll see you in the next video.